Let me ask you about a few of the different protocols out there. Because again, these are, you're our third live broadcast this week. So I got a bunch of ideas floating around my head from some very interesting people in the space. You know, Dan's got 2.8 billion invested. He was doing a fund for Bitcoin in 2013. He talked about going to those endowments back in 14 and 15 and pitching them. And he said you could hear a pin drop. They were just like, the elevator's this way. But he said on the way to the elevator, they would say, what's the minimum? Because I might want to get involved, but there's no way we would consider. And so he's seen that market go up and up and up, and he had some good perspectives on it. Talk to me about Bitcoin and Ethereum. They have this very strange relationship. It's almost like a tale in the Bible of like two brothers, where one behaves this way and one behaves this way, and they have this weird future. Most people in the ecosystem believe that both are here to stay. They both have different needs that they fulfill. I want to get your thoughts on that, and then I'll throw Cardano in the mix after that.
Sure. I think they both have the Lindy effect at this point, network effect, Metcalfe's law, whichever one you want to use. They've all been around long enough that they will continue to be around. And each day that passes is another 10 days that they will exist into the future. And so I think if you're a new entrant to the crypto space, those are the two assets that you should focus on, and probably not even beyond that. There's the huge debate, Bitcoin maximalists versus Ethereum maximalists, which to me, I find very silly, because I think they're both important assets and are utterly different. And I don't understand why there's such a strong debate, because they're totally just different things. Bitcoin has really solidified its case in my mind as a store of value, digital gold, deflationary asset that's a hedge against inflation, a hedge against central bank, a hedge against poor monetary policy. We know that banks are not going to stop printing. Therefore, Bitcoin will always rise in value, right? And it has the deflationary math where it's programmed in that every 4 years, new supply will be cut in half. The algorithm will become twice as difficult, and only 21 million will ever be mined. That is incredible. That is the most important asset that's ever been created, bar none. Does that mean that if you're a trader or an investor, it's the only one you should ever touch? Not in my mind, right? And so let's think of Ethereum more as the internet in the 1990s, right? It's an opportunity to invest in the platform that the future of value is being built on. We have the internet. The way I like to explain it, we have the internet. People understand a decentralized exchange of information, right? You go on a website, there's no third party in between necessarily. I can send you an email, you can send me an email. We can exchange information directly, peer to peer, without a third party in between or a tax collector. Can't do that with money. Can't do that with value, right? You can't transfer value without a third party in between. If I want to send a bank wire to someone in Nigeria, there's countless people in between that transaction taking their small piece, if it even arrives in a week or two, right? And so what's being built on Ethereum largely are ways to exchange that value directly peer-to-peer in a decentralized manner without someone in between. So to me, saying I only love Bitcoin, I hate Ethereum is like saying I would buy gold, but I wouldn't buy Amazon. And I don't see the connection, right? And so I think that they're both incredibly important assets. They both have incredible benefits that are different than the other one has. I think the debate comes in where the Ethereum people start saying Ethereum is hard money, and the Bitcoin people take sort of opposition to that. But that's how I view it. And so to me, Bitcoin, as I said, is the most important asset of all time. Ethereum is the much better trade. I think Ethereum has potentially exponentially more upside than Bitcoin from the current prices. And I love Bitcoin as much as the next guy, but I think that Ethereum, is an early investment in a world-changing technology still. And I think that, if you're a trader or you want a percentage in something that could really have a moonshot, I think that's where you want to be.
And this would lead to the flipping question, which is, will Ethereum go higher than the price of Bitcoin? Probably the market cap is more of an interesting thing to talk about, or maybe it isn't at all. What is your view on the flipping?
Again, fun narrative, but who cares, right? People are so consumed with it. But if you view them as separate assets, then it's apples to oranges as opposed to apples, and it doesn't matter. But it is fun to talk about. I ask this question to guests by the way, all the time. And what's interesting, I don't think Ethereum flips Bitcoin in price, right? That's a huge gap to fill. Not even probably maybe in market cap, but that could potentially happen. It's gotten pretty close, halfway there. But in a lot of metrics, some would argue that Ethereum has already flipped Bitcoin. If you to check out Coinbase's Q2 earnings report, they had more trading volume on Ethereum than Bitcoin, right? And so I think that we see more institutional interest coming into Ethereum. There's a lot of metrics, the actual usage of the network, the transactions, all those on-chain metrics. Ethereum is blowing Bitcoin out of the water. That's nothing against Bitcoin. If it's a store of value, you're not going to transact in it as much, right? It totally makes sense. And Ethereum, everything that's happening, you need to use Ethereum to burn gas fees. So I view them as just completely separate assets, and it doesn't matter which one flips the other in which direction. It just matters that you have exposure to both.
I had a guest this week that said it's not apples and oranges. It's like comparing an apple, which is Bitcoin, to like an automobile, which is Ethereum. Like they're just so different things that do completely different things. Both have value. And I like your example, gold versus Amazon. Actually, I might start using that. Very different things. Both can have value. I get a little frustrated talking to a maximalist because, again, it doesn't feel like I can say, but there is this thing that has this way to do smart contracts, and I do see that being a value in the future. But I guess I understand why you're a maximalist. You've usually been in the market for a long time. You've invested a lot of your time, effort, assets, emotions into this thing where probably people called you crazy for a long time, and maybe it's hard to see outside of it. I was talking with Michael Saylor, and at the end of the conversation, he did say that there was a real role for stablecoins, and those are built on the Ethereum network with a contract. And so he did say that currency, that standard currency, will be just as important as Bitcoin, which he calls digital property. So it was nice to see, he's not the ultimate maximalist, but it was nice to see him having the conversation. And of course, Coinbase has come out and said, I think they're going to own Bitcoin and maybe Ethereum on a balance sheet for the first time.
So, they said crypto, right? They said we've been cleared to buy 500 million in crypto. They did not say Bitcoin. So it will be interesting to see what that means.
Do you get frustrated and talk to maximalists, or do you just know it's part of the deal and they have their way? And
yeah, I take my beating and move on, to be quite frank, because maximalism is the same in Bitcoin as anywhere else in the world, right? And first to say, I think that Bitcoin maximalists have gotten us as far as we are. They're incredibly valuable, and their belief when nobody else believed is what's made Bitcoin what it is. So this is not really a negative at all. But I think maximalism in general is a bit of stunted growth, and it's like you said, you're so passionate about it and so emotional about it, and you believe in it so much that your mind starts to maybe close off to the to other possibilities, and you become very rooted in your ways. And that applies across human history. It applies to my town, my team, my country, my religion, my whatever, right? The maximalism is the same brand across all things. So I know that in this world, you're really not going to change most people's minds about the things that they fundamentally believe the most. Right. So I don't get frustrated. I think it's incredible that they continue to kick the ball forward on the most important facets of what Bitcoin is, because they're the ones who will never give up on those key narratives, those core narratives, the freedom that it brings, and the really, really important aspects that people need to understand. And maybe they won't if they just get in late and buy it because the price is going up. They need to hear that. Interesting. Michael Saylor was on my show, and the first time he ever went on basically a 90-minute rant about it, that digital real estate, was on my podcast.
Oh, nice.
Came up with the idea of it being like granite and buying a piece of Manhattan,
yeah,
and buying the building, and you would never sell it. Would you use your building in Manhattan as money? No. You would hold it, you would take a loan against it and use that money. That, he hashed that entire thing out with me. But he's right. And he's right about that aspect, but then he's right to be open-minded about the use case of stablecoins in that context, because Bitcoin's white paper says peer-to-peer cash. And that's not what Bitcoin has really proven to be now, right? Peer-to-peer cash is more stablecoins. So if you can eventually live in a world where you borrow against your Bitcoin and you transact in stablecoins and you can earn yields and you never have to sell it and take a taxable event. Like you said, that's what wealthy people have been doing since the beginning of time anyways. Bitcoin just becomes another asset. But anyone who has transacted in Bitcoin versus transacting in stable coins knows which one is easier, right? Bitcoin takes a little longer. It's got some fees. The price might be different when it arrives. If you're sending someone a pegged amount in US dollars and not a pegged amount of Bitcoin, stable coins are fast, familiar, and easy, but they're dollars. They have all the same problems as a dollar. If you're backed by the dollar, you have the same inflationary problems as the dollar does. So yet again, two separate things. There's a great place for all of them. Nobody believes that global banking systems are going to be settling in Bitcoin, but it would be amazing to see them using stable coins instead of ACH and Fedwire and the Swift and the outdated protocols that we've seen them use for years.